Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we're going to take a look at and explain how banks and financial institutions actually market to folks, why you receive the offers you receive, even if you don't exactly always qualify for them. So, of course, if that sounds interesting to you, then go ahead, press the subscribe button, and let's get to work. Now, I will add a qualifier of our own onto this episode. I have actually worked in a financial company's marketing department for about 2 years. Now, it was only one company and only one marketing department, so this is not a full encompassing view of how everyone does things, but as there I served as kind of a project manager, continuous improvement person. So I was involved in a lot of different things, and so I think this gives me a good enough perspective, along with the my dealings with banks on air and things like that, to comment on this. Because one of the questions I get a lot is, we'll just use Chase for example. People will get those Chase Inc. mailers or emails that say, "Hey, you're invited to apply for this elevated offer." Back when the Chase cards had the $900 bonuses, or they've been running that forever, but get the point. So people will get them, and people here will say, well, I know I'm over Chase 524, which is Chase's rule. It says if you've opened 5 or more new credit card accounts in the last 24 months, you're not going to be approved. But yet you gave me the mailer, so surely I must be approved, right, and be able to get this card. Well, not exactly. I can see how you would be led to think that because you were invited to apply for something, but you will still be denied for if you're over 524. So why does the bank do this? What do they get out of it? And better yet, why don't they care about the customer experience? Because that's a really terrible customer experience. Well, we got to first take a look at the 3 major players in this. And of course, it might be different bank to bank, but in general, you have your risk management, and underwriting is a function of risk management. Those are the guys who make the 524 rule and whatever other rules, a credit limit, income, things like that for banking products. Their goal is to protect the bank, while sometimes working with sales and marketing to make sure they're still letting in enough people and just managing the risk the bank takes on accordingly. Next, you have marketing. Marketing's main goal is to serve up leads for sales to close on. Now, a lead is any potential, information that we could have on a potential customer, right? I got your address on the mail, or I bought your address, maybe, okay, I can send you a mailer. That's a potential lead, right? Now, again, I know some of these credit card offers, you don't necessarily have to go and branch to sales, right? But generally, sales would be the bank branch or the banker, actually taking your information, closing the loan, closing the product, whatever you're applying for, right? So their goal, obviously, is to, get as many new accounts as they can. They're always yelling at marketing to get as many leads as they can. They're always yelling at, risk management to lighten everything up. Now, that's a super high-level overview of the relationship, right? So where do these leads come from, right? Well, they can buy them in bulk, right? There's a lot of money to be had selling leads, selling information. That's why you've seen all the crackdowns lately and all the boxes to opt in or out of having your information shared. Or they can go from existing customer base, right? A bank like Chase, biggest in the, here in the States at least, they have a ton of different clients, ton of different products, things like that. They get leads from buying other banks, over years, things like that, right? And so what you're likely to do is maybe from the top down say, hey, look, we have a goal to sign up 1,000 new ink cards in the next quarter, whatever it may be, right? And so you go to, maybe marketing goes to their data intelligence team, data science team, whatever they call it, and say, I need to generate an audience. It's usually called an audience for these ink cards, right? So this is the promotional budget that, accounting has approved. This is kind of sales input, what they think they need competitively to get it. And this is our cool copy and logos that we put in here and the assets to make the mailer look cool, which is where all the happy people come in, right? Everyone's so happy to have their ink card, right? Okay, so based on all the leads I have and data I've acquired, I can pull in an audience and I can say, give me people who live in maybe this area or these areas. Give me people who are, in between this age range, who we know make this amount of money, what have you. And that can be my target audience. And you can drill down farther into that and see what is the success rate or likelihood of that. You could pull existing products people who have business accounts, who have merchant services accounts, things like that, right? Makes sense. It could literally be whatever you think the best audience is going to be for this. That's why, again, you see targeted offers sometimes that I might get an offer that you don't get. Something about my profile data that they have on me came up that said this could be a better lead than the other person, right? So wouldn't take it personally. That's how it works. But you notice what they don't have is updated credit information. And because there's rules around, a company or bank just can't constantly track monitor your credit, right? Because that, in this example, 524 is the barrier, right? There could be other barriers, but 524 is the easiest example. And so when they pull your credit for a product, it's a snapshot in time. And even the only real product I know where they can continually monitor your credit is during a mortgage application. But even then, we're so kind enough to pay for it, right? It's not free. We have to pay for them to monitor our credit to make sure nothing changes during that process. But then once the process is closed, they stop monitoring that credit. Now, yes, not to get too far out there, but your mortgage company can get an alert when you apply for mortgage credit because it's a little bit different than regular credit. I'll be honest, I don't know how it's allowed, but it is allowed and everyone does it. But that's not really part of this. So because I can't really track your credit, the last time you applied, you could have been over 524 and you got denied. And maybe I can set a timer in my audience and say no denial since in the last 6 months or whatever, right? Or 6 months since last application. But that still doesn't tell me that you're approved or not. I can't really know that yet. So I might as well send you this because all they're really doing is loading in a ton of these emails or a ton of mailers into like a Salesforce CRM and sending them out in bulk for like not that much money. I mean, for someone like Chase. I mean, I don't know what it costs, but it's nothing, right? And so you get it and you apply. And you're like, well, this sucks. I didn't get in. Now at the bottom of the offer, it's going to say, subject to credit approval or something like that in very tiny print. But why doesn't Chase care? Well, one, again, because they can't really know. But number two, because even if you don't get approved, well, I still got a bunch of information back about you just going through the credit card application. Now I know that's a confirmed lead. That address, that email address I used, that goes to a person who's interested in our products. I've updated income. I've updated business information, even though a lot of us are just making up businesses, right? Sole props and whatever. I get a bunch of information back. And I get a new snapshot in time. So now I can see, oh, well, maybe you got denied this day for this, but I can put out a timer and say, okay, let's try it again in 3-4 months, whatever. Of course, I don't know what you've applied for since then, but I can do that. There's also the chance that you take this mailer and you go in branch. This is sometimes why these mailers require you to come in branch, go to a sales floor. And sales go, well, okay, you're denied for this, but while you're here, what are your other business needs? Merchant services, investments, you name it, right? They have a bunch of other stuff they can sell you. So just because of that, it's not really a waste of a lead or a waste of an invite. It's just, another way they could potentially cross-sell you stuff. It's just very annoying to have to go through. But overall, that's the reason why you get these offers, and that's the reason why they have in small print, down with subject to credit approval. Now, there is a few other things you should be aware of. Is the one, language. There's two words that get misused or interchanged all the time, which is pre-qualify and pre-approval. So I'll put this on screen for you. This is a very helpful infographic from Investopedia. But you can see a pre-qualified offer is basically based on what we think we know about you. It's not necessarily legitimate. Is where pre-approved is actually, we should really use, say, verified, unverified, and verified, but those don't sound as sexy in marketing. Because pre-approved means you've given us information, we've pulled credit, or we have enough information on our side to say, yep, this is the offer you're going to get. Now, sometimes you see those, like, historically, you open a new deposit account and then, you'll get pre-approved for a credit card. Well, they've, worked out with risk management that, because we do soft pulls for these deposit accounts, we can then offer them this, right? See that. Now, another thing here is, so keep that in mind, the type of offer that you get as well, because there is a difference, and most of them are not going to say pre-approved. They'll say pre-qualified, which means you're likely to get it, and then we've covered the small font. Now, another one is, I personally never opt out of marketing material. Even though as annoying as it is, and most stuff you get is absolute junk, or it's the same offer they have online, if you opt out and you unsubscribe, you're basically dead to the bank in the marketing capacity, right? Because they've put rules in place now that, we can't actually, market to you or keep doing that if you say you want us to stop. Now, if you have business with the bank, they can still keep contacting you, but not just for marketing stuff. So what I always say is, if you watch this show or the other channel and you apply for a ton of stuff, then I have an email account for that. I used to use an AOL account, but I've also learned that certain accounts are treated a little bit differently in marketing. So like Yahoo and AOL and whatever the other ones are that we used to be really big are. Now most of the time they're like, oh, that's probably a fake account or a junk account, right? So now I just have a fake Gmail account. It's a real Gmail account, but just for banking stuff. And because once or twice a year you'll get a good offer in the mail. Citi sent me one, and Independent Bank sent me one, in the mail. I'm like, oh, that was good. That's all I got last year that was worth anything, but it's still worth it. So I would never opt out unless you're just, you're not really playing this game that hard. You really don't want to be bothered. But I would say opt it in. And then that's the big thing. Just kind of keep your eye out on them and still, do your research on things like this and understand where you're at in 524 and understand, the credit card rules. Because even if you see an American Express card offer, well, if you just got approved for 2 cards or you already have 5 cards, and even if they give you an offer for a 6th, well, you're not going to get approved because you have too many cards, right? So that's kind of the behind the scenes of the marketing and how it goes. Again, at least from my perspective and why you get so many offers. And again, a lot of these rules just aren't really talked about. The bank doesn't, a lot of the bankers don't even know about them, so just keep that in mind as you get your marketing material. Always do your homework. Keep an eye on the mailbox in your inbox because, again, you do get, on occasion, good stuff. It's rare, but, again, on occasion, you do get good stuff. So anyways, guys, hope that explanation helped clear things up a little bit. I know it's annoying, but at least now you know why you're being annoyed. So, of course, if you like this one, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. Again, posting content just like this every week, right back here every Sunday with all the news you can use in the week that wasn't credit and finance. And, of course, daily on ProfitableContent.com, where I have plenty of credit card offers, news, and bank offers that, we're marketing free. So you'll definitely qualify for some of those because I tell you up front what the qualifications of eligibility are. So anyways, guys, that's going to do it for this one. As always, thanks so much for watching. I'll talk to you very soon in the next one.